So, this is Series 1 Fundamentals of Finance. So, today we're going to talk about filing statuses, important tax deadlines, and filing requirements. Presented by yours truly, myself, Dr. Ambrea Lacy. So, a little bit about me. I am the founder of iTax Solutions and iTax Institute. In 2009, I launched a mobile tax preparation firm. I had no idea that it would grow into a seven-figure firm. I am super proud of that. It took a lot of hard work, dedication, time, sacrifice, but it definitely grew, and I'm very, very proud of that. Very, very thankful, very, very blessed. In 2019, I founded iTax Institute, and to date, I've trained over 500 entrepreneurs to launch a successful tax preparation business. I earned my bachelor's degree from the University of Texas at Arlington in 2010. I earned a master's degree or my MBA from Texas Women's University in 2012. And I received a doctorate in humanitarianism and the Presidential Lifetime Achievement Award last year in 2023. And I am definitely dedicated to uplifting others through financial education, business coaching, and philanthropy. One thing I really do proud myself on is education and helping people. So, if you have any questions, like I said, be sure to write them down and I'll do my best to answer them at the end. And also, if you ever have any questions about anything, you can always send us an email to contact at itaxinstitute.com. So that's contact, CONTACT, at itaxinstitute.com. So you may be wondering, okay, what did I register for? What is the Fundamentals of Finance series? So basically, what the Fundamentals of Finance series is a free series of webinars that I decided to put together to educate taxpayers as well as small business owners on matters regarding taxes, business structure, business funding, financing, bookkeeping, a lot of the things that I've learned over the past 2 decades as a business owner as well as a tax professional. So I just want to share this information with each and every single one of you. So be sure if you enjoy this tonight that you share the information with a friend so that they can learn as well. So, who is the Fundamentals of Finance series for? It's for taxpayers or small business owners, anyone who wants to get more information about this stuff that they didn't teach us in school that we finally realize as adults, like, oh goodness, maybe I should know this information, right? And I don't expect anyone to leave here after this series is complete saying, hey, I'm ready to um, prepare taxes or run a credit repair business or, do business funding or anything like that. But I do want to make sure that you have the basic information. And if there's anything that I can elaborate on, that I provide that information for you. So if you're a business owner, a lot of times I get questions from people who are business owners about what they should do when they're starting a business or even taxpayers, right? You have a lot of people who are full-time taxpayer, or I'm sorry, not taxpayers, full-time employees that receive a W-2. And one of the biggest questions that I get is regarding withholding. So later on in the series, I'm going to host a webinar where I talk about the federal withholding. So that's definitely something that you want to make sure is accurate when you are getting your taxes withheld. So when it comes time to file your taxes, everything looks good. So what should you bring to the Fundamentals of Finance series? So, when you attend the Fundamental of Finance series, it's important that you just bring something to write with, okay, so that you can take notes. Be sure that you're able to refer back to this information later. Also make sure that you come with an open mind, right? Come ready to learn, ready to soak in this information and put it to use, basically. Yeah. So, what is the objective of the Fundamental of Finance series? Basically, the objective for me is to educate anyone who's here regarding these different webinar series. Like I said, taxes, we're going to go over business funding, we're going to go over investments. Eventually, I am going to have some guest speakers as well to educate each and every single one of you about topics that are not my specialty. So I'm just going to kind of start out with, with my thing, what I'm pretty good at, which is, taxes, tax laws, all of that good stuff. And we're going to move into other topics. So I hope each and every single one of you are ready to get started for tonight. So this series, again, we're covering tax essentials, filing statuses, important tax deadlines, and filing requirements. Again, be sure to write your questions down, and then I'm going to answer them at the end. So we're going to go ahead and jump right into this. So there are 5 filing statuses. When you file your taxes, there are 5 filing statuses that it's important that you're fully aware of. Your filing status is going to be determined by your marital status on the last day of the tax year. So if you're single on December 31st, if you're married on December 31st, if you're divorced on December 31st, according to the Internal Revenue Services, whatever your marital status is on that day is what determines your tax filing status. So there are 5 tax filing statuses. They're single, married filing jointly, married filing separately, head of household, and qualifying widower. I'm going to break each and every single one of these tax filing statuses down. I'm going to begin with single. So I'm pretty sure all of us were once single, but okay, anyways, I'm still single. One day, hopefully I'll be married, but that's a whole nother story. Okay, for filing purposes with the Internal Revenue Services, single, you must be unmarried on the last day of the year. You must be legally separated or divorced or separate or have a separate maintenance decree, no dependents, and you do not qualify for any other filing status. So what I see a lot of times is sometimes when I'm speaking to individuals, as a tax professional, I can't tell you what your filing status is necessarily. I have to get the information from you and then I can determine what your filing status is. But sometimes people will tell me like, "Oh, I'm single." Well, you may be single in the world, right? But for tax filing statuses, single means you're not married and you don't have any dependents that you're filing on your tax return. You can be unmarried and have dependents, but if those dependents are not on your tax return, then you're considered single. So let's move on to the next filing status. We have married filing jointly. Married filing jointly is pretty self-explanatory. Basically, there are 2 people that are married and they agree to file a joint return, okay? So sometimes you may have an individual who is maybe the breadwinner of the family, and you may have someone else who is a stay-at-home parent, right? So even if those individuals are married, even if the second spouse does not have any income, they are still considered a spouse on the tax return. A lot of times I get the question, my spouse doesn't work. Can I claim them as a dependent? No, you cannot claim your spouse as a dependent because technically you guys are married. So if you are married, and both parties agree to file a married tax return together, then you would use the married filing joint filing status. Okay. You can be, let's see, what does it say? Are living together in a common law marriage that is recognized in the state where taxpayers now live, or in the state where the common law marriage began, are married and living apart, but not legally separated. So sometimes you can have a couple that is married filing joint, but they may not live in the same household, but they're actually married. That's okay too. Experience the death of their spouse during the tax year and did not remarry before the end of the year. So we'll get into that with the qualifying widower. I don't want to confuse anybody right now with that particular, with going into that too much. Experience the death of their spouse during the tax year and remarry before the end of the year, filing joint with the new spouse. Next slide, please. Same-sex married couples. sometimes I, get clients that are same sex and they are considered married in the state that they live in. So if they are legally considered married and that same sex marriage is acknowledged in that particular state, then they can file a married filing joint or married filing separate tax return together. Next slide, please. Married filing separately. So the married filing separately filing status is basically two individuals who are married, but they don't agree to combine their income. They're still actually going to be on the same tax return. So both names are going to be listed. However, let's just say, for instance, the husband would have his tax return, his name, John Doe, social security number. The wife's information would be below, but only the husband's information, his income information would be listed. Okay. So, same thing on the wife's tax return. She would be listed, and then her husband's name would be listed. But on her tax return, only her income would be stated on the Form 1040. Now, when you file married filing separately, some tax credits cannot be claimed or they're reduced. So it's important that you speak with your tax professional, to kind of determine what may be the better filing status for your situation and just kind of explain to them exactly what's going on. Because sometimes people do separate. So you want to make sure that you're maximizing well, you're not maximizing, you're minimizing your tax liability as much as possible, but that's definitely a question for your tax professional. Now, some people are married and they decide that they want to go with this filing status, maybe because their spouse has a previous debt, right? So I've encountered couples that maybe they do the married filing separately status because maybe the spouse has student loans. Maybe they have a balance for child support or some type of government debt. So that's important to consider as well once you get married and you decide that you want to file a tax return with your partner. I always recommend for individuals to call the IRS debt offset line every year before you file your taxes. I've seen it so many times in the past. Make sure you save this number in your phone. Call it every single year before you file your taxes, 1-800-304-3107. They'll ask you for your social security number. I think you have to enter it maybe twice, and then they'll let you know if you have a offset that will affect your tax refund. So let's just say, for instance, if you owe student loans, if you owe a $2,000 student loan balance and you're getting a refund of $5,000, the IRS is going to say, hey, you owe a government entity $2,000. You're getting back $5,000 on your tax return. We're going to go ahead and take this money, and then they're going to send you the remaining balance. So when you call this number, they will tell you that. So if it's student loans, I think it'll say Department of Education, and it'll give you a phone number. So it'll state the government agency that the taxpayer owes, as well as a contact number so that you can give them a call and see what's going on. And a lot of times, honestly, depending on the agency and depending on the balance, and of course, probably depending on the situation as well, if you can get on a payment plan, I think that I actually had to do this. I owed my student loans, and I think there was like some type of payment plan or something like that I had to get on and be in good standing for like 9 months. And then I filed my taxes later on and I was able to actually get my tax refund. But I was like, I'm not filing my taxes if it's going to go towards my student loan. So I decided to get on that payment plan, do the right thing with the payment plan for 9 months, and then I was able to get my tax refund. So make sure that you save that number and call that number every single year before you file your taxes. Next slide, please. So here are the credits that are not allowed if you decide to go with the married filing separately filing status. So make sure you understand that if one spouse itemizes, the other one has to itemize as well. You can't deduct student loan interest. You don't qualify for the earned income credit. You don't qualify for the dependent and care expenses credit. And basically, that's just for the child care that people pay for their children. So you don't qualify for EIC, you don't qualify for reimburse or the child credit for the daycare expenses. There's some more as well on the next slide that if you go with the married filing separately status, you cannot claim. Up to $2,500 can be excluded from income under an employer's dependent care assistant program, the elderly and disabled credit, the adoption credit. A lot of people adopt children. If you're married filing separately, you can't take that credit. The education credit, which includes the lifetime credit as well as the American Opportunity Credit. The child tax credit and retirement savings contribution credit may be reduced. So you want to make sure if you go with this married filing separately status that it's working out in your benefit. Okay. Next slide. Also, if you're married, there is something called the innocent spouse relief. So basically, this can relieve you from paying additional taxes if your spouse understated their taxes due on your joint tax return and you don't know about the errors. So if you file a joint tax return with your spouse and the IRS is like, wait a minute, you owe all this money. The other spouse, they're like, wait a second, I knew nothing about this. Now, definitely there's some paperwork that you have to complete and there is a process, but sometimes this happens. So just kind of keep that in mind if you're married and you run into a situation like that. And if you ever need additional information on it, feel free to book a free consultation with us. I offer a 15-minute consultation, so I can go into that a little bit more or give you any additional recommendations. Next slide, please. Innocent spouse relief is only for taxes due on your spouse's income from employment or self-employment. You can't claim relief for taxes due on your own income, household employment taxes, individual shared responsibility payments, business taxes, or trust fund recovery penalties for employment taxes. Finally, or no, this is the fourth filing status. I'm sorry, head of household. So, head of household, you must be considered unmarried on December 31st, and you must have paid more than half of the cost of keeping up a home for the tax year. And you must have a qualifying person that lived with you for more than half of the tax year that you took care of. So here's some cost for maintaining a household. So some costs included renter's insurance, mortgage, homeowner's insurance, real estate taxes, repair costs, groceries, utilities. Of course, if we are providing for a household, these are most of the things that we take care of, right? Some of these costs do not include transportation, medical expenses, education, vacations, shoes, clothes, life insurance. So in order to maintain a household, so as a tax professional, some tax professionals may ask for this, some may not. But what I do know that based on my experience in the last few years, the IRS has become a little bit more strict. And unfortunately, what they do is for taxpayers with a lower income, they will audit these taxpayers, right? And they're like, hey, we gave you this earned income credit and your income is below, $30,000, but now we're going to audit you and we're going to, tell you that you need to prove to us these are your children. You need to prove to us that this is the place that you live. Um, and when you have to prove that information, what we, ask the client for is, what is it? A rental agreement, right? Or receipts from paying rent, grocery receipts, or utility bills. So make sure that, if you're claiming this head of household filing status, that you have some type of lease agreement or you own your home or you have receipts showing that, you're paying utilities, okay? Because a lot of times what we're seeing these days in the last 2 years, the IRS has been asking for this information. So make sure that you're able to provide that if asked for it. So who's considered a qualifying person? A qualifying person needs to live in the taxpayer's home that wants to claim the head of household for more than half of the tax year. Closely related relatives, such as child, stepchild, adopted child, brother, sister, or a descendant of one of these who you claim as a dependent under the qualifying child rules. Mother or father who can be claimed as dependent under the qualifying relative rule. Brother, sister, grandparent, niece, or nephew who you can claim as a dependent under the qualifying relative rules. So what I've also seen as a tax professional here lately, again in the past 2 years, y'all know they hired 1 million tax people at the IRS. So now these people are, really serious about doing their job and sending out these audit letters and verifications and that kind of thing. So you also want to make sure that when you're claiming dependents on your tax return that you have birth certificates, right? If you're claiming a sibling or you're claiming a niece or nephew, right? Your tax professional should be asking you for birth certificates or the reason why you're claiming these dependents, especially if it's not your daughter or your son, right? So that's really important to know and make sure that you do have that information, because if they ask for it and you can't provide it, then the IRS will say, okay, well, hey, that $8,000 refund that we gave you, we want part of that money back because you can't provide this information to us. So always make sure that, you kind of have a paper trail, or for instance, if maybe you're taking on custody temporarily for a family member or something of that sort, make sure that you have something in writing and you provide that to your tax professional, okay? The last filing status is qualifying widower. Qualifying widower. If a taxpayer's spouse died in 2024, the taxpayer can use married filing jointly as their filing status. The taxpayer must claim a dependent, and the filing status may be claimed for 2 years following the year of death of the taxpayer. So basically, what a qualifying widower is someone who was married and their spouse died during the tax year. Okay. Um, I typically recommend that, let's just say, for instance, if your spouse dies in 2024, right? Technically, they were alive during 2024. Okay. So, whatever filing status you would have claimed, I typically recommend that you're gonna keep that same filing status, right? So if you were doing married filing joint and your spouse dies in 2024, then you'll continue with the married filing joint for 2024. Yeah, if you did that in 2023. So 2 years after the death, so 2025 and 2026, as long as the taxpayer does not get married to anyone else, they can use the qualifying widower status. Okay. So just kind of keep that in mind. I pray that doesn't happen to anyone. But again, these are the official 5 filing statuses that the Internal Revenue Services has provided to us. So my job is just to enlighten you on this information. So next slide, please. Okay, I think I went over that already. So here's a brief summary of what we've covered so far. The 5 different filing statuses: single, married filing joint, married filing separately, head of household, and qualifying widower. Tax filing statuses can change during the year. I want you to remember that your tax filing status, it depends on your marital status on December 31st. And sometimes more than one filing status can apply, but you want to choose the one, again, like I said, that results in the lowest tax liability. So that's basically saying where you don't pay as many taxes. So whatever that status is, you want to make sure you consult with your tax professional to get that. Important tax deadlines. So what I've noticed over the years is that sometimes there's a lot of confusion about when tax season is or when the tax season deadline is. So be sure to pay close attention to this. Taxpayers must file their individual tax return on or before April 15th, unless the 15th falls on a Saturday, Sunday, or a legal holiday. If the return is filed after the due date, April 15th, the taxpayer may have to pay interest and penalties. So from January 1st to April 15th, that's considered like peak tax time. Okay, that's when most people file their taxes. Again, no matter what day, or I'm sorry, yeah, I would say no matter what, not what day, no matter what year, the deadline is always going to be April 15th. But again, if it falls on a weekend or a legal holiday, it's that Monday afterwards. Next slide, please. So in 2023, the tax deadline fell on a weekend. So I'm sorry, what does it say in 2024? Okay. So I guess maybe it fell on Monday, April 15th. So in 2025, so for this upcoming tax season, the April 15th is going to be on a Tuesday, so you don't have to worry about anything as far as it being on the weekend or anything like that. Okay, next slide. I think I confused myself a little bit when I was reading that. I apologize. April 15th is the deadline, y'all. So if you need to file an extension, a lot of times taxpayers need to file an extension for a number of different reasons. But if you do need to file an extension gives you a 6 month, 6 additional months to file your tax return, which means now your tax return is due on October 15th. Now, this extends the time to file, but not the time to pay. So if you are expecting a refund, you do not have to file an extension, right? There are a lot of taxpayers out here, or, they think that, okay, well, I didn't get to file my taxes April 15th, and they're contacting a tax professional. And, some tax professionals are like, yeah, give me your money, and you're getting a refund. If you are getting a refund, y'all, you do not have to file an extension, okay? You don't have to file an extension, but if you are going to owe the Internal Revenue Services, right? If you're going to have to pay taxes, right? But you're like, hey, you know what? I'm not ready to file yet, but I know I'm going to owe. Then you want to go ahead and file the extension. Now, it doesn't hurt to file an extension. If you're not sure whether you're going to owe or you're going to get a refund, it won't hurt you to file an extension. You won't get a penalty if you file an extension and you happen to get a refund, right? Nothing's going to happen to you. But I just want everybody to make sure that they're aware that if you're getting a refund, and if the 15th just flies by your head, but like, hey, I typically get a refund of, a couple grand every year, then you don't have to worry about that, right? And as a tax professional, we are able to electronically file tax returns until October 15th, right? So you can file your taxes technically from January 1st until October 15th. So that's why I say peak tax season is technically from January 1st to April 15th. That is, when most people file. But if you need that extension, take that extension, get everything, taken care of. But if you do owe taxes, it does not give you extra time to pay the taxes. You're still going to get those penalties, and it's going to accrue that interest. So make sure you're fully aware of that. Next slide, please. So when you complete an extension, it's Form 4868. A tax professional can complete this for you, or, you can complete it yourself as well, right? There are some free websites out there, I think, that will allow you to complete Form 4868, which is your extension, right? So be sure that if you need that you get it filed, okay? Just make sure you get it done. A taxpayer is allowed an automatic 2-month extension without filing Form 4868 to file the return and pay any federal taxes due if they're a U.S. citizen or resident, and on the due date of the return, the taxpayer lives outside of the U.S. in Puerto Rico, or basically they're in the military on duty outside the U.S. or Puerto Rico. Next slide, please. If the tax due is paid after the regular due date, April 15th, interest will be charged from that date until the date the tax is paid. If the taxpayer served in a combat zone or qualified hazardous duty area, a longer extension of time to file may be available. So I always encourage taxpayers to pay their taxes due as soon as possible. Now, if you file your taxes and you do owe the Internal Revenue Services and you're not able to pay them, just focus on getting the tax return filed because it does take time for them to process these things. Some of my clients are like, hey, you know what, file the return. We'll wait until the bill comes in the mail, or in 30 days, maybe we'll pay it. Then I have some clients who are like, hey, you know what, I'm going to go ahead and send it in now whenever you file the tax return. But as a taxpayer, make sure you're doing what's best for you and what works out best for your situation. But the most important thing is to get the tax return filed. There are so many ways that you can pay the Internal Revenue Services once you have that tax due. But as long as you get the tax return filed, that's really the most important thing to do. Um, Back in the day, there was a lot of mailing of tax returns. As a tax professional, I recommend that you electronically file your tax return, whether you are a DIY, TurboTax person, or you have an experienced tax professional like myself. You want to electronically file it because it allows it to get to the IRS instantly. You get your refund a lot faster and it minimizes a lot of errors. In the past, you know, when we mail in tax returns, it's usually because someone maybe had an IP PIN number and they're unable to locate their IP PIN number. But I will say this, I've attended, several tax conferences, and the IRS is actually getting really more like tech savvy, I guess. So now what you can do is if you're unable to locate your IP PIN number, you can actually create an ID Me account. And if you don't already have an ID Me account, y'all, I recommend everybody to have an ID Me account. So if you have an IP PIN number, which is to protect your identity, sometimes people get these if they've been a victim of identity fraud or something like that, to protect themselves. I've also seen taxpayers get these IP PIN numbers maybe for their children, right? Sometimes children's social security numbers will be compromised for whatever reason, or maybe they're, trying to make sure that the other parent doesn't claim the child. Like I've seen so many situations, with my time in this industry, and you can actually get an IP PIN number for a child, right? It's free of charge. You just go on the IRS website, www.irs.gov, type in IP PIN number, and you can apply for an IP PIN number. It's free. So this is not anything that, you need to pay anybody for. You can go on there and you can do it yourself. But make sure you have an ID Me account, because once you create that account, you can see so much. I know a lot of people will, when they're waiting on their tax refund, sometimes they'll pull like tax transcripts and stuff like that. So you can pull your tax transcripts. You can pay your balances if you have a tax due. You can pay your balance through that. You can take a look at your balance. You can do so much in that ID Me account when you create that. So make sure you have that. It's free of charge. Now, it does take a few minutes, and you want to make sure that you do it from your phone. Okay. You don't want to lock out your account. So you want to make sure you do it from your own personal cell phone, and you have an email address that you can always access. I've seen people unfortunately get locked out of these accounts because they create the account with an email address that they don't use a lot. And then when it's time to log into that email account, they can't log into it. So this is really important. Like once your IRS ID Me account, once you can't act or access it, like it's really, really difficult. So make sure that you get that done. It's free of charge. It may take you about 15 minutes. They want you to, like, I want to say, like, take a selfie, or you have to do like a video call. So um they make sure you are who you are. Next slide, please. So I'm sorry, those were just a couple of ways how to pay your balances with the IRS if you have one. So again, according to the IRS, W-2 forms should be mailed out to employees no later than January 31st for forms derived from the previous calendar year. So a lot of times what happens is, at the beginning of tax season, people are looking for their W-2s. The United States Postal Service is moving, 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 right? So by law, if you're a business owner and you are issuing out W-2s or you're issuing out 1099s, right? You should have those to your employees or to your contractors on or before January 31st. If you're going to mail them out, they need to be postmarked before January 31st. And if you are expecting to receive a W-2 or a 1099 from someone, you should receive it no later than January 31st. Now, again, if they mail them out, because I've seen a lot of companies, they'll mail them out on the 31st. Be sure to give them, a little bit of a grace period, maybe about a week and a half, because a lot of times there's a lot of mail fluctuating during that time. So just give it a little bit. But if you don't receive it by, I usually say February 15th, around Valentine's Day, then that's when you kind of maybe want to get back on the phone and contact the company and, kind of talk to them and see what's going on. So next slide. Okay, 2025 important tax deadlines. So be sure to take notes. January 15th, 2025 is the due date for individuals who make estimated taxes. January 31st, this is the deadline for employers and financial institutions to send out important tax forms, which we just discussed. March 17th is the deadline for corporate tax returns to be filed. March 31st is the deadline for businesses to electronically file Form 1099 and Form 1096 to the IRS. And basically, what that is, those forms are for businesses to file saying, hey, here's a summary of all the W-2s that I just sent out. Here's a summary of all the 1099s that I completed. So it's kind of like a bit of a W-2, but for the actual business that has to be submitted to the IRS. April 15th is the last day to file your 24 tax return. June 15th is the deadline for second quarter estimated tax payments for 2024. And it's also the deadline for US citizens that are filing for the extension if they are living abroad. Next slide, please. September 15th, 2025, deadline for third quarter estimated payments for 2024 tax year. October 15th, final extended deadline to file individual tax return for the 2024 tax year. So y'all, if you have not already filed your taxes, make sure you get that done before October 15th, okay? So this is the final topic of filing requirements. So whenever you file your taxes, you want to make sure you have all your personal information, especially if you're providing this to a tax professional. Even if you're not providing this to a tax professional, this is pertinent information that you want to have, because even when you guys file and do the DIY filing with like TurboTax or any other website, I want y'all to be aware of something, right? I have encountered so many taxpayers that will say, yeah, this person. So if you get your taxes prepared with me and this is your first time, right? I always ask for your prior year tax return. Okay. So when I look at that prior year tax return, I'm nosy. I like to kind of see, who your tax professional was the prior year, and I analyze things. I look at it to kind of see, what kind of work they do. Sometimes I know these people, sometimes I don't know these people. But sometimes what has also occurred is I will have someone to say, oh, yeah, well, Susie down the street, prepared my taxes. And I'm like, well, hey, I want you to know that when you look at the bottom of this tax return, it says self prepared. So if this person does not have a PTIN, which is a number that's issued by the Internal Revenue Services for paid tax professionals, right? But if you have someone who's preparing your taxes on TurboTax, they don't have to put their PTIN. So one of the benefits of going with a tax professional is that it's kind of like our social security number and our signature at the bottom of that tax return saying, hey, I filed this tax return. This is my name. This is my business name. This is my PTIN number. This is my contact phone number. This is my stamp of approval on this. So just make sure you consider that if you do have somebody who's, DIYing it for you on these external websites, because what can happen is if you get audited and you call them and you're like, hey, what happened with my tax return? The IRS is not going to believe that Susan down the street prepared your taxes. They're going to say, well, this says self prepared. So they're going to hold you accountable for that. So a benefit of, having an experienced tax professional would definitely be that their name is stamped at the bottom of that tax return. They know what they're doing. And more than likely, you probably have some type of audit protection. In the event that you ever need it. But personal information, you want to make sure you have those social security numbers, those social security cards, your bank routing and account number, if you're going to get direct deposit. You always want to have a copy of your prior year tax return. Now, if your address changes in the middle of the year, you can actually update that information with the IRS because the IRS does not forward mail. So if you're living at 123 Main and you move over to 456 Grass Street, the IRS, the postal service is not going to forward your IRS mail to the new address, right? What'll happen is they'll return it back to sender. So there is a form on the IRS website that you can complete in order to change your address. All right. And especially if you got those IP PIN numbers, oh, you definitely want to make sure that your address is updated with the Internal Revenue Services. Also, if you're a victim of identity theft, you want to make sure you have the IP PIN number. Like I said, if you have the ID Me account, the IP PIN number I think is mailed out at the end of December, the very beginning of January. So it goes to the last address that the IRS has on file. So that's why it's important to make sure that they have your current address. Okay. So if you don't get that, then you can get it online, but it's always best to just make sure you keep your address updated with the IRS. Next slide, please. Income documents. Whew, let's talk about these paycheck stubs. So, by law, you can't file your taxes with paycheck stubs. Back in the day, we had these RAL loans. The things have changed so much over the last 10 years. But if a tax professional is telling you that they can file your taxes with your last paycheck stub, they're out of line, y'all. You can't do that. Now, they may be able to give you a quote, but by law, they should not be transmitting that and electronically filing that as your final tax return to the Internal Revenue Services. But if you want a quote, you can always provide those paycheck stubs, right? But I believe that we work smarter and we don't work, we try not to work as hard, even though in the background we're working hard. But we want to make sure that we actually, provide those W-2s and those actual tax documents to your tax professional so that it cuts down on a lot of confusion and to just make sure everything is accurate. If you're a business owner, you want to make sure you have your business bank statements. If you're accepting payments from Cash App, Zelle, Venmo, PayPal, anything like that. You want to make sure you have that. If clients are paying you cash, you want to make sure that you keep up with this information. Um, as a small business owner, if you're not, if it's not within your budget to pay someone for bookkeeping, you can do it yourself. I probably just started, paying for that in the past, maybe like 2 years. Other than that, I was doing that stuff myself, right? You can get you a free Excel spreadsheet, right? Created on what is it, Google Sheets, right? It's free of charge. All you need is a Gmail account. I like to ball on a budget, so I'm always going to try to tell you what to do for the free. Create you a Gmail account and Excel spreadsheet. You can put all your expenses on there if you want to do it month by month, however it is that you want to organize it, but you want to make sure that you keep up with that information, okay? So you can keep up with your income as well as your expenses, right? What business owner does not want to know how much money they made down to the penny? Because I do. I like to know exactly what's going on. Unemployment compensation. If you receive unemployment or social security benefits, next slide, please. All of that information has to be reported on your tax return. Now, if you receive a settlement, next slide. If you receive a settlement, you don't have to, like, if, let's just say if you were in a car accident or something like that, that's not anything that you have to report on your taxes. But, anything else, if you're receiving some type of form for it, you want to make sure you provide that to your tax professional. Some are for informational purposes only, but the more you have, the better. So Form W-2, 1099, or other information. People or organizations that paid you during the year are required to report the payments to the IRS. They must file these forms with the IRS and send you a copy, which is your W-2, that you should get by January 31st. These forms report income you received during the year. So W-2s are the wages you receive from your employer. W-2G, that's for lottery and gambling winnings. So if you go to the casino and you hit big, you got to report that on your tax return, y'all. Even if it's multiple statements, you have to provide that information to your tax professional, or, and if you don't have it, because sometimes I know when I used to, to gamble a lot, I would lose my forms. So I would just call the casino like right before it's time for me to file my taxes and just say, hey, can you send me all my forms? So you can do that, excuse me, as well. Some other common 1099s are 1099Ks for payments for payment cards. Like I said, Square. A lot of my clients have, what is that booking app? I can't think of it right now, but a booking app for like stylists and people in the beauty industry and get those 1099Ks. That's income, y'all. You have to report that. All right. 1099Gs for unemployment. INT, that's for interest. 1099 DIVs, that's for dividends. 1099 NECs. So basically, if you're a freelancer or independent contractor, somebody is likely going to give you a 1099 NEC, 1099R, right? A lot of times I see so many people forget this. They take money out of their retirement or their 401k, and they forget to provide that information to us. So make sure that if you take anything out of your retirement, your 401k, pension, annuity, anything like that, make sure you report that information on your tax return. Okay. And if you have the right tax professional, they will make sure that when you report that information, how to help you out on reducing your tax liability. Okay. If you receive Social Security benefits, 1099 SSA, 1099 miscellaneous, that can be for just other income. What I typically see with that is people who get bonuses at work. They'll receive a W-2, and then some companies will bonus them on a 1099 miscellaneous. You still have to report that information. 1095A, this is so important. If you receive if you receive healthcare from the marketplace, you have to report that on your tax return, y'all. So there's a credit that's available. So make sure that you provide that 1095A. Don't leave it off, because if you leave it off, your tax return is going to get held up. And we don't want to hold your money up. Nobody wants their money held up. So make sure you get that. And if you can't locate it and you know you have marketplace insurance, you can always call the marketplace and they will fax that information over to you or help you access your online account. Next slide, please. Documents for credits or deductions. If you take any of these credits, make sure that you have the documentation to prove it and to back everything up. If you have childcare expenses, make sure you have all your receipts, right? If you own your home, right, make sure you have your 1098 from the mortgage company, or you have your receipt from paying your property taxes, okay? If you have donations, Goodwill, or to small organizations, make sure you keep those receipts, y'all. Keep those receipts, keep those receipts, keep those receipts. It's recommended that you keep those receipts for at least 3 years. All right. That's what the IRS says. They say, hey, we can come back and audit you. So we recommend you hang on to that stuff for about 3 years because we might come knocking at your door. Healthcare expenses, make sure you keep those receipts as well. Retirement contributions. If you're a teacher, there is a credit out there for teachers. I think it's $250. So make sure you keep up with those receipts. And I know, shout out to all of our educators. I know they spend well over that to help out our children. So shout out to all you educators out there making it happen, investing in these young folks. Next slide, please. Documents from side jobs and self-employment. So if you have a side hustle, if you're driving for Uber, if you do hair, if you do makeup, if you clean, if you cook, if you, whatever it is that you do, if you have some type of side hustle, I always recommend, at first, if you're not able to get your LLC, that's okay. But once you are in the position to get that LLC and get your business formally structured, guys, you want to make sure that you do that. It opens up so many doors. I know sometimes for some people it can seem scary, but it's not scary because once those doors start opening for you for funding, and just so many other things, you're going to be so happy that you did it. So make sure that you have a separate bank account, okay, because you don't want to get in trouble for commingling your funds, your business funds with your personal funds, okay. Make sure you have separate bank accounts, a personal bank account and a business bank account, okay. Make sure you keep up with all your receipts and mileage for travel, all of that good stuff. Expenses. If your business earned $400 or more, you are required to report that. So if you do a side job for somebody, let's just say maybe you're like an interior designer and you're like, yeah, I'll decorate this or I'll do this event planning for $500. If you earn $400 or more, according to the IRS, you are entitled to report that. Even if your business does not have an LLC or an EIN number or any official name or anything like that, you are required to report that to the IRS, y'all. They want all their coins. So they say if you make more than $400 and we don't know about it, we need you to report it to us and then you need to pay us our taxes. But if you have a good tax professional, they'll help you to get your tax liability reduced. Next slide, please. Okay, summary. So here's a summary of the information that we've covered regarding personal information, income documents, information, um, credits and deductions, side jobs, and being self-employed. As a reminder, the Fundamental of Finance series is going to be hosted every 2 weeks. So the next series will be September 26th or 25th. Let me take a look at my calendar really quick. Sorry. Um, it's going to be on September 25th. Okay, so that's going to be on a Wednesday at 7 p.m. Central. So if you were a little late tonight, or if you want to watch some of this information again, or you want to share this information with a friend, be sure to subscribe to our YouTube channel. We are going to have this recording uploaded. So let's see. It looks like Miss C has a question. If you feel you may owe more than is being taken out of your paycheck, can you pay the IRS via payment during the year or before end of the year? So what I would do is I would take a look at my withholding. So depending on the income bracket that you're in, I typically recommend that you get at, around 10% withheld. So if you earn $60,000 for the year, you want to get around 6,000 withheld, especially that's 10%, especially if you're single, right? Especially if you're single. Now, if that same taxpayer that earns 60,000 also has, 2, maybe 3 dependents, I would recommend, or I would have a conversation with my client and say, hey, if you make 60 grand and you're giving these people 10%, that means that you're only bringing home around $54,000. So if you need that money to survive and to take care of your children, then I would say I would probably, recommend, like, okay, well, hey, let's reduce your tax withholding, because now you have the dependents to offset that. Okay. So what I would just, take a look at to answer that question better would, we offer a withholding checkup. And basically with that withholding checkup, we take a look at your last 2 paycheck stubs and say, okay, well, hey, you're getting too much withheld, or, maybe you're not getting enough withheld. But there are people who come to me, 6-figure earners, high 5-figure earners, who go exempt, y'all. Like, they go exempt and they're like, yeah, here's my W-2, Ambrea, work a miracle for me. But, you know, I'm that girl, so it usually happens. But, if we can avoid that, right? But if you do, I tell my clients that go exempt, right? If you go exempt and you don't have anything withheld, like, I can work a miracle, but you can't expect to get, this huge refund if you didn't give them anything, right? So let's see. Next question. I hope I answered your question, Miss C. Did I answer your question? Perfect. You're welcome. You're welcome. Thank you so much for being here. Next question. Should I file my personal taxes with my business? And what if I am funding my business from my personal job? So, a lot of us start out like that as entrepreneurs, right? We're working our full time 9 to 5. And once we get home from that 9 to 5, like, we're working our business, we're funding our business, from the job. And that's part of it. So, congratulations on that. That tells me that you are definitely on the right path, because you understand that, okay, hey, I'm going to work, but this is really what I want to do, right? So congratulations, and definitely let us know what type of business you have. But as far as answering your question, should I file my personal taxes with my business? So if your business is grossing less than 50,000, then yes, I definitely recommend that you file a Schedule C. Okay. Now, it would also kind of depend on how much you're earning from your W-2 as well. But for most people, yes, I would say if your business is grossing less than 50,000, then we want to get that Schedule C, on your 1040. So it's just going to be an additional form that's on there. It'll show, what type of business you have, how much income you made, all of your business expenses, right? Because those business expenses is what helps you to reduce your tax liability. That's why I tell you to keep up with everything. All right. Now, if your business is grossing over 50,000 and it's an LLC, we may want to look at getting that business taxed as an S corporation and filing a separate business tax return. Okay. But once you get into to that big boy arena, right? Now you have 2 tax returns that you have to file. You have the business tax return, and then you have the 1040. All right. But if you're under 50K, I would say, just stick with the personal tax return. The Schedule C, even though that's your business, is not a separate business tax return until you separate those entities. Okay. And what we'll discuss later is self-employment tax, right? So that's kind of why I recommend, if you're making over 50K, like, hey, we need to, you're out here, you're in the game now. So, you have to look at things a little bit differently. So, okay, credit repair. All right, awesome. And you have your LLC, so you're structured properly. That's great. Any other questions about anything? Let me know if I answered your question, or if you have anything else you want to add, like, after your question. Any other questions about anything? Okay. If not, again, I want to thank each and every single one of you for being here tonight. I look forward to seeing each and every single one of you I'm sorry, in 2 weeks. Okay. So you'll be getting a text message or an email regarding the next topic for the next series of the Fundamental of Finances. So you guys have a great night and thank you again for attending the Fundamental of Finances. Look forward to seeing you all in series 2.